The Dow and the Nasdaq took off strong this morning. Dow was up over 100 points at one time, but it was not the right time yet for a reversal. Note how they did not get back to the 50-day moving average just yet. Down here they were close, but not close enough to try to get there, whereas at this point they're close enough that more than likely, especially with stochastic still heading down, there was still going to be some more downside. It would not be surprising to see a couple more days where it kind of bobs here on the 50-day moving average before an upturn starts. The Nasdaq gapped open, but immediately started selling off, so there wasn't any indication of any strength once the markets opened. Still given a possibility of at least coming down here, but probably now, with the stochastics getting toward the oversold area, that somewhere right in this range, off the bottom of this last support level, might be the target. At this point, there's probably still a day or two yet to the downside. Understanding that the downtrend may have still been in progress even though the market was trading strong keeps people from closing out positions that they shouldn't be out of. For example, JCOM traded way up this morning. In this chart, it shows that it opened up here, but then immediately started selling off for the rest of the day, trading lower by the end of the day, indicating there's probably still more downside. Had we thought there has been a trend reversal today, that might have scared people out up here on their short positions covering at the high. And the strong trading also could fulfill what we indicate as rounding or a rounding pattern fry pan bottom and a doji sandwich where we had a strong up day and a doji. And our very simple rule of a doji is that it's going to move in the direction of how they open it the next day. Well, a positive open today made this a good trade. Now, did we expect an 18% move in this trade today? Not necessarily, but it, using the candlestick signals, still puts you in positions where the probabilities of making a big price move are always in your favor. The candlestick patterns have information that is built into them despite what the market is doing. Our recommendation on EDU is based upon this fry pan bottom setup bouncing up off the T-line. Where's our next potential target? Up here at the 200-day moving average. This had a nice big move today, even though the market had a very sluggish day at the end of the trading day, which makes for some very easy trading again on recommendations like LOPE, where it opened positive today, right in the breakout range, but did a doji. But we know what the our doji sandwich looks like, and we know our doji rule, that if it opens positive tomorrow, you want to buy immediately because the probabilities are it's going to move positive. If it's going to move positive, where is it going to go? It's going to be into a new breakout area, which has the potential of having a big price move. This is not rocket science. This is merely taking information that you can add together to create high probability trade situations. That'll be it. We'll see you in the chat rooms.